HCLTech, which is down a solid 9 to 10% despite the company increasing the guidance, because the guidance increase has been lower than expected. Q3 was softer versus the expectation, and the street is worried about a softer Q4 as well, because that's the initial indication that we got from the management. Let's dissect that further with C. Vijayakumar, the CEO and MD at HCLTech, as well as Shivalia, the CFO at HCLTech, joining us on the show right now. Hi, gentlemen. Good morning. Thanks so much for making time. Vijay, let me start by asking you, the revenue have jumped up as well as margins have improved a bit this quarter. Any key factors that you would want to talk about, and more importantly, what's the expectation from Q4? Because Q3, as we pointed out, was softer than expected. Are you expecting some sort of softness in Q4 as well?
Yes, we delivered a very good quarter. Our Q3 was strong. Of course, the software business has a seasonality which delivered almost 18% sequential growth. And services business also delivered a strong growth of 2.2%. And we expect the momentum to continue in Q4, but there would be some moderation in some of the large projects coming to an end and anniversary impact of some of the large deals. Factoring all that, overall full year guidance, we provided 4.5 to 5%, a 1% increase in the lower end of our guidance.
Right. Vijay, so given the good growth in services revenues, are there any plans to expand further? You mentioned in the press conference that software revenue was actually below your expectations. So what is the reason behind that, that you fell back?
No, service revenue is definitely was in line or better than our expectations. Only the software revenue was a little below our expectations. And we've had 5-6 quarters of good year-on-year growth on software. So one quarter, if it is below expectations, it's still in line with our full year guidance for the software business.
The EBIT margin shift, that's something that I want to discuss because it's been constant at 18 to 19%. You did manage to do 19.5% in the quarter gone by. Are there further levers available for you to improve the margins from here on?
So that's what we saw in this quarter. Despite the fact that we had a wage hike of 80 basis point impact, as well as furloughs impacted around 40 basis point, and another 20 basis point came in because of the integration linked costs of the acquisition we did in this quarter. But despite that, the services margin, the growth was only 22 basis point sequence quarter on quarter. And that is on the back of the Project Ascend, which we announced 6 months back, and that is really working well and gave us 100 basis point improvement in this quarter. This momentum to continue, and the plan is to through this cost efficiencies, maybe the invest in Gen AI programs as well as the market expansion, but the coverage we want to intend to increase to the savings, which we are going to achieve through this program.
Right. Vijay, your TCVs this quarter was about almost $2,095 odd million, slightly lower than the previous quarter. Are you seeing any changes in deal momentum or client decision cycles?
Our pipeline is quite strong. It's almost near all-time high, and it is well diversified pipeline across verticals and geographies and service line. And we see the spending and the overall demand environment improving at this point in time.
Okay, so that's something to take heart from. The overall environment is improving, but the LTM attrition, Vijay, that has increased to 13.2%. Again, is something that we have seen across all industry. Not really surprising given the entire industry turn. But what are you doing in terms of improving the employee retention and optimizing the talent pipeline?
This is our attrition is within our desired range. There can always be some variations from quarter to quarter, but definitely nothing to be concerned at this point. And full year attrition would be in the similar lines is what we would expect.
Right. The other thing I also wanted to understand, Vijay, in terms of geographies, the Americas continue to dominate your revenue contribution. Are there any other specific growth opportunities that you're targeting, maybe in Europe or other regions?
Continue to expand our business across all the geographies. Germany is a very important focus geography for us. France is also a focus geography. And similarly, across the world, we've identified focus and new frontier countries where we continue to invest and expand our presence and acquire clients and expand our business there.
Okay, Vijay, that point is taken. But what's the outlook on the overall demand environment for FY25 ending and FY26 across key verticals, whether it's BFSI, healthcare, manufacturing? Anything that you would want to call out on a sector-specific view?
From what we've seen last quarter and the quarter before, we are seeing a gradual improvement in the spending environment. We believe that will continue into the coming quarters. However, there could be significant changes in the broader business environment and business landscape itself, from a few days from now. So barring anything specifically correlated to that, we think the demand environment is good.
Right, gentlemen, great to have you both on the show. Thanks for highlighting the earnings and the visibility going forward. HCL Technology is, of course, taking a whack as we speak right now. It's down about almost 9% as we speak.